What's going on, everybody? It's Jeff here. Welcome back to the channel. Options has been a very popular topic as of late, especially because the market we are in today is nothing like it was at the end of 2020, the beginning of 2021, where you could have picked pretty much any stock and it just continued to move higher and higher. The volatility inside the market as of late is giving the short-term trades some amazing opportunities. So in this video, I want to talk about two very important things when it comes to trading or investing in options. And then at the end, I want to give everybody a completely different perspective, not only when it comes to trading and investing options, but just investing in general. I see a lot of people struggling, and I feel like this might just give you a completely different view of the market. Before we get into that perspective, let's talk about the two very important things when it comes to trading options, and two things that I absolutely love about it. The first one is going to be the leverage that it provides. The second thing we're going to talk about is you have a defined risk, which is also going to kind of get into that perspective. But let's jump into the charts, just give you guys a little bit of an idea of why options can be very powerful. Before we talk about this, I do want to mention that just like the upside can be very, very profitable, the downside can also be very negative. So let's talk about this right now. If you were to compare apples to apples, NVIDIA right now is sitting at $243 a share, which means if you wanted to buy one share of NVIDIA, it would cost you $243. And if the stock price moved to $248, you would profit a total of $5. However, if you wanted to take that $243 and purchase an option contract, you can scroll down here and find the February 11th, 257 and a half strike price is going for about 243. Now, an option is equal, one contract is equal to 100 shares. So you have to multiply that times 100, getting a total of $243. Now, here's where the difference comes. If the price moved to 248 from 243, your total profit would be $120. And if you're asking me, well, how do you already know that? It's very simple. One of the Greeks that we look at is the delta. The delta means for every dollar price movement of stock price, your contract value moves this number. For example, 24 cents or $24 per contract. So if NVIDIA went from 243 to 248, that would be a $5 move, and 5 times 24 equals $120. So you're putting up the same amount of capital, 243, and if the stock price moved $5, if you bought one stock, your profit would be $5. But if you bought one contract, your profit would be $120. That is called leverage. Now, it also does work to the downside, meaning if the price went down $5 and you bought the stock, your loss would be $5, but your loss of your option contract would be $120. So it doesn't just work for the upside. Now that gets into the second part, is the defined risk. And we're also going to carry that into a completely different perspective. But the one thing that I love about options is your risk is completely defined, meaning the most you can lose is the money that you put in, right? You do not have an exponential loss. If you had a $20,000 portfolio and you were looking to capitalize on and make a $1,000 profit on a NVIDIA move, you would probably be wanting to buy anywhere between 30 and 40 shares, meaning your total exposure is $7,500 to $10,000. However, if you wanted to capitalize that on an option contract, you could potentially just buy 4 or 5 contracts, and then your total exposure would be between $1,000 and $1,250. Okay, and the most that you can lose if NVIDIA, there was a market crash, NVIDIA went down to $150 very quickly, even though I don't expect that happening, your loss is your initial investment, and it happens in a much smaller factor. You can also lose very quickly, so I don't want to make it seem like there's only upside to options. But that is one thing that I love about options, is your risk is completely defined on far less capital. Now, that gets into my last point, and I'm going to be making a ton of videos all about options, but I figured I would start with this one. A lot of people are thinking that they need to be, in order to be profitable inside the market, okay, this is an options focus, but just in order to be profitable inside the market, they need to be right more than they're wrong. And I can't begin to tell you how false that is. And the reason being behind that is what I have found over the last 10 years that has slowly changed and it took me a lot of time to learn is that in order to consistently be profitable inside the market, the most important thing, especially to me, all right, is managing your risk. Okay. Having a specific strategy. Now, there are individuals out there that might be correct 75% of the time. All right. But on their gains, their gains are much smaller than their losses. And I'm sure you've seen that on individuals that they take too big of bets, okay, and they might have many small wins, and then all of a sudden they have one big loss, and that wipes out their entire account. And that's because they're not managing their risk. Now, let me bring that back to a completely inverse, in different perspective. There are also people that are right 50% of the time, or maybe only 45% of the time, that are consistently profitable inside the market. And that's because they manage their risk, meaning they understand that when a stock moves in a different direction than they expected, they immediately cut their losses. All right. Whether you set a stop loss at 25%, all right, of an option contract, whether you are looking at a break of support, if you're buying a call contract, if you say the stock price breaks support, you know that momentum and direction has changed, you get out. But there are a lot of people that are not right a 75, 80% of the time and are still very, very profitable inside the market. I personally try to have a 2-to-1 strategy, meaning if my max loss is going to be, let's say, 25% on an option contract, I'm looking to get gains of 50%. So by looking at a chart and understanding how much an option would move, I want to make sure the chart allows that option can go at least 50%. I don't want to buy an option contract when I feel that the upside is only 10 to 15% because I'm exposing myself to a bigger risk or loss than I will be for a gain. All right. Now, that doesn't mean that I never sell any option contracts unless they get to 50%. I do tend to scale out. And especially, I will even show you what had happened with our Facebook play on Friday. Facebook was a beautiful call going into a little bit late afternoon. You could see this movement. We saw the pressure building up, especially I had these key levels built out at this 236.45 price range. And we had a couple contracts because considering the short expiration that went 5, 6, I think even over 600%. And I'm scaling out along the way. And that's what helps, even though I'm wrong probably about half the time, I continue to be profitable inside the market because I'm managing my risk. If the stock price moved in a different direction, which I have this red line here, if it broke that support hard, I would have immediately taken a loss and I wouldn't have tried to see if it would turn around and come back around. My loss would have been about 25% on that contract, unless it dragged out a little bit further because of expiration, but it would have been about 25% on that contract. So always making sure that you have a defined risk strategy and really having the understanding that you don't need to be correct 75, 80% of the time. There are some months where I am correct maybe 60% of the time, and other months where I'm only correct maybe 50% of the time. But I can still consistently be profitable because my risk to reward is always intact. My reward is always higher than my risk. So I hope that gives you a different perspective. And I hope that if you are inside the market right now, just thinking like, oh, I'm just not right enough. Okay, that's completely not true. But guys, that's it for this video. I'll continue to make options video and I'll see you in the next one.